Here we have the current stock market update for Super Micro Computer Incorporated, stock ticker SMCI. Before we begin with today's chart analysis and weekly update, if you find these educational materials to be helpful in your trading, please remember to click the like and subscribe buttons and leave your thoughts below in the comments section so that other traders will be able to find this information more easily on the platform. So what we have here is the 30-minute price chart. We're going to do a little bit of a week in review type of thing here. What we're looking at currently is a share price movement that has really obeyed this prior sideways trading channel that we were expecting to see for this stock. So this is kind of an interesting development here because as we can see, what we were looking at for here would have been a breakout in either direction in order for a major trend movement to occur. But what we have ultimately seen here has been a share price action that has largely obeyed this same exact range trade here. So, what we were pointing to previously would be the possibility of, if you were going to trade this on a short-term basis, you could possibly buy in at these lows coming in right around $435, and then possibly sell at the highs coming in at just around 460. But it's a bit of a tight trading range here. And as we can see, that type of price movement is being confirmed by the exponential moving average activity as well, because what we're starting to see there, is a sort of a constricting pattern here where all of the major exponential moving averages are starting to tighten and almost flatline. So that does create some difficult trading conditions here because, really you only have two options at this point. You could either, range trade here. So buy at these lows and then sell at the highs, or you can wait for a breakout in one of these two directions. As things currently stand here, we have not seen a break in either of those directions. But we can say that we did start to close not only above the exponential moving average cluster, but right near the top of that trading range as well. Ideally, what you would have liked to have seen if you're bullish on this stock would have been a break of this roughly $460 area, because this would have then dismissed this the sideways trading range, this invalidated the trading range, and then allowed share prices to start to possibly generate some positive momentum into next week. However, this did not happen. So, what this sort of sets up here, at least, is a possibility for a failure here. I mean, if we start to see the broader market perhaps sell off on Monday, it wouldn't be totally surprising here to see a failure and then trade right back into that trading range once again. These are going to be very boring trading conditions if this continues, but I don't really expect for that to be the case because anybody that knows this stock knows that this is an incredibly volatile mover. We see some tremendous price movements in both directions. So the possibility of a sideways trading range like this is almost unheard of, at least in recent memory. So, the likelihood that this continues seems unlikely, seems improbable. I wouldn't really expect this to continue. And, if you're bullish on this stock, what you really need to see here is this break above 460 that puts us back above all of the major exponential moving averages. And then it allows us to start to retarget this price gap that had been found previously. The problem with this price gap at this point, however, is that share prices have been trading for so long at this point. This price gap occurred after the Hindenburg short seller report. So, we're going back in history here a bit. This price gap itself would have occurred during the end of August. So, we're getting on a month of time here. And, if we really pass a month, the likelihood then that a share price gap winds up being filled becomes less likely. We're seeing a similar type of event in GameStop at the moment. I understand people that trade Supermicro are not really the same demographic of people that trade in GameStop, but there was a recent price gap in GameStop as well, and the stock is starting to move back into that price gap territory. But there has been enough time that has passed where most of those orders that would have been placed in this area are now likely either expired or were closed manually. So that's really the reasoning behind whether or not a share price gap winds up being filled. It's not just sort of a magical technical event. As with all technical events, these are based on fundamental factors, and the fundamental factor here would be, the issue in place would be that we would presume that there are many buy and sell orders that would be parked in this area that would still need to be filled. The market just skips over that area, and then presumably at some point those orders would need to be filled. But if a certain amount of time goes by, I mean, once you're a week later or a month later, a lot of those orders are going to manually expire after a week or a month. It might not be all of the orders. It probably isn't all of the orders, but you can start to expect then that a majority of those orders would likely to be filled at that point. So what we're looking at here is the reduction in the possibility that this price gap actually influences share prices and starts to generate some momentum to the top side. What you would want to see if you're bullish on the stock would be near term. First, you would need to see a break of this trading range here, because this is a strange event for this stock. This is a very boring type of activity here that we're seeing. It's not really common, but we first need to see a break of this exponential moving average. That would be this 200 period EMA, this blue line here, break above the trading range, and then we can start to look at whether or not this price gap can be filled to the top side. Currently, what we're seeing in the indicator reading here, if we drill into the RSI at the moment, relative strength index, we can see that positive momentum is still the name of the game. The dominant factor here is this upward trend momentum, but we're also starting to see some more near-term negative influences, share price momentum that is focused on the downside a bit more. Ultimately, you do have to side with the longer-term trend momentum, which is still in the positive direction. And there is a possibility here that we could actually break above this trend line. That would probably occur if we were to see a positive breakout of that sideways trading range. So, there's some factors at work here. And if share prices can just move a little bit higher, I think that then opens the door for a much larger move in the upward direction. As things currently stand, there is still a possibility that we get a price failure near term with the trading on Monday. But I think that if we are going to see a failure, it probably needs to occur on Monday. It would probably need to occur here relatively soon, because if we do break above this 200 period EMA and break out of this sideways trading range, I do think that can probably generate some positive momentum that at the very least forces a retest of this prior resistance zone at 475. So here's the current stock market update for Super Micro Computer Incorporated, stock ticker SMCI. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market. Lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.